trading the same way at 3 a.m. that you are at 9, you're leaving money on the table, and you're probably losing money too, because the market doesn't behave the same throughout the day. In this video, I'm breaking down the 3 trading sessions: Asia, London, and New York, what to expect from each, and why timing matters more than people think. I'll also show you something on PU Prime that's a game changer if you want to test session strategies without risking the bank. Let's get into it. Quick disclaimer, all information here is not financial advice. The information should be used for educational purposes only. Why sessions matter. The Forex market is open 24 hours a day, but it's not equally active throughout. Different parts of the world wake up, trade, and then go to sleep, and that creates very distinct personalities at different times. If you understand the personality of each session, you stop fighting the market and start aligning with it. Firstly, Asia session. This is your Tokyo and Sydney session, roughly midnight to 8 a.m. UK. It's the quietest of the 3 by a long way. What you'll usually see here is range bound, slow price action, tight ranges, low volume. The market's basically idling. So I will quickly mark out just a couple of sessions. So it's 12 here to 12 midnight till 8, 12 till 8. If trading feels confusing and inconsistent, maybe you just need a clearer direction. Let me introduce the Signaler.com, a signal service focused on delivering precise, well-structured trade ideas without unnecessary noise. Here's what you can expect. Carefully prepared trade setups, entry, take profit and stop loss levels, straight to the point market insights, signals built around discipline and risk control. No exaggeration, no overtrading, just calculated opportunities based on analysis. Even better, they provide a 7-day free trial so you can evaluate the signals yourself before making any decision. Stay focused, follow structure, trade with the plan. Try the Signaler.com today. Now, let's continue with the video. Why does that matter, right? The markets are basically idling, so they're in tight ranges, and what you'll usually see here is a range bound slow price action. Tight ranges, low volume. The market's basically idling. So why does that matter? Because Asia builds the range that London is going to break. The high and low of the Asia session are massive reference points. London traders are watching them like hawks. So these highs right here and these lows formed during the Asia session are prime targets for liquidity for the London session traders. So London opens around 8 a.m. UK time, and this is where things wake up. London is the biggest Forex center in the world by volume, and you can feel it on the chart. So again, we'll create another session break right here. We'll go from here, right. So there is Asia open, and we go all the way to here, which is London open. So this is London open, and what we have, these are the Asia lows right here and the Asia highs right there. Okay, let's get this off the chart. So that's where Asia opens. Asia closes at 8 when London opens, roughly 7 or 8, and then London then goes on throughout the day till around about 4 o'clock. It goes through London lull around about 11 and 12, and then New York opens, and then it carries on up until 4. Right, so let me just zoom in a little bit here right now and show you a typical London move. So this is a classic London move. Price, right, it comes down and it runs through the Asia low or the Asia high. We flip it whichever way, sweeps that liquidity, and then reverses hard for the rest of the session. It happens really quickly. So as you can see, the liquidity is built up during Asia. As soon as London opens, it comes right down, it sweeps that low, and then it pumps to the upside all through that session, and then continues through into New York right the way up. This move, right, to the upside, to the downside, it happens nearly every day. If you know what to look for, you can spot this and you can jump right in. In this section right here, this is my favorite move of the day. That's where the cleanest move usually happens. If you can get in right here, or when you see this break, you get the sweep of the low, takes it, it breaks structure, comes right back down, retests, and then just pumps up for the rest of the day. Right, so now New York normally opens around about 1 o'clock in the UK, so we'll just move this here, and that kind of goes on to around about 5. It can move a little bit later, but 4 or 5 is like the maximum, is the cutoff point for when the volume starts to slow down. So it opens around about that time, and it overlaps with the UK. That overlap, by the way, is the most active part of the entire day. Massive volume. What I look for in New York is either a continuation of the London move or a complete reversal. There's a thing called a Judas swing, where price reverses the London direction, runs back the other way, and then reverses again. Caught a lot of people out, hence the name. After the overlap finishes, things calm down again, going into the New York session. And by 8 or 9, I'd probably say around about 5 o'clock, the markets basically start to wind down for the Asian Open again. So as you can see, this is a typical continuation during New York. So you've got that London to New York crossover, price comes down, sweeps this liquidity here, pumps up, breaks structure, comes back down, and then continues all the way through to about 5 o'clock, 6 into 7. So practically, how do you use this? If you're a new trader, pick one session and master it. Don't try to trade all three. London or the London-New York overlap is what I'd recommend. That's where the cleanest setups are. Mark your Asian session highs and lows every day, and then watch how price interacts with them when London opens. And if you have a job, trade the session that fits your life. Don't force yourself awake at 3 a.m. to trade Asia if you can't focus. Now, here's where I want to plug something properly useful. Testing session strategies is something every trader has to do, and you don't want to be doing it on a full-size account where every losing trade hurts. PU Prime have a cent account. The way it works is that your balance is denominated in cents instead of dollars. So a $100 deposit shows up as 10,000 cents. Your lot sizes are tiny, your risk per trade is tiny, but the market conditions are real. The spreads are real. The execution is real. If we go here and we can see, right, your minimum deposit is 20. Here, your spreads, you get no commission. Okay, these are your lots, and you can still do the copy trading. It's the perfect way to test if you actually trade better in London than New York, or whether your session strategy holds up over 50 trades without blowing up a real account while you find out. I genuinely think every new trader should be on a cent account for their first few months. Live conditions, minimal risk. So there we have it. Quick recap. Asia builds the range. London breaks it. New York either continues or reverses it. The Asia high and Asia low are massive liquidity targets, and the London Open is where a lot of the cleanest moves happen. Pick one session, master it, and use a cent account if you're still finding your feet. That's the play. If this was useful, like the video and let me know which session you trade in the comments. See you in the next video.